Good day, ladies and gentlemen. My name is Isak Staats. I'm the chairman of the IWTO Market Intelligence Committee. Today I'll be talking to you about the wool market, the outlooks, and what drives wool prices into the future. The content of this presentation will cover wool prices, correlations as I see them, and various aspects of supply and demand. So let's look at supply. Now, if you have to draw a picture of our supply chain, this is how it looks. It's quite complicated. Starting on the left, you will see this is for Australia, but it looks the same for all countries in the world. And as it goes through the various stages, how it looks from processing down to the end consumers right on the right-hand side. One thing to note here is the big stream that still goes to China up and until the end as a consumer market. Let's talk about supply. If you talk about supply, we have to talk about Australia. They're still the biggest suppliers of wool in the world. The biggest suppliers of high quality wool as well in the world. So what happens in Australia has a big impact on all of us. Australian wool production has started to recover for the past 3 years after a prolonged drought. This year, this 2023-24 production season saw Australian producers getting a big scare from El Nino, a drought-inducing weather condition. What happened was that producers in Australia started to proactively sell their lambs and their sheep to make sure that they will survive the next drought. But this caused a huge drop in international trade lamb prices. Australian producers experienced a 40% drop in their prices for this past year. As it turned out, it wasn't necessary. Australia are actually having the opposite now of a drought, very, very wet conditions, but there was a huge sell-off of lamb stock in Australia. What does this mean? I think Australian producers are sitting in a very difficult situation. They've got very, very high interest rates and high debt levels due to the drought that they experienced, and now very low commodity prices. The forecasted net farm income in the next year does not look good for Australian wool producers. What does that mean? It means that Australian wool producers respond to market conditions like any good business. As you can see, Australian producers in the 1992 and the mid-90s started to change their production from pure wool production to a more mutton-driven production. For the past 10 years, production has actually been quite stable, but as we've seen now, I think on the one hand, there's very, very limited, or a lot of lambs were sold off, a lot of breeding stock was sold off, but I think wool producers will be looking more towards wool than they have been for the past 10 years. Let's jump to the other side of the equation. Let's jump to the demand side. As I said, as you can see, China is still a big part of the market. But our biggest markets are in Europe. What is happening in our major markets, Europe and America? Currently, inflation rates in Europe are coming down. Europeans have been experiencing a long period now of high inflation with the interest rates that goes with that. The forecast for inflation is coming down significantly. European Bank would like to manage it between 2 and 4%. Expectations are that interest rates would come down accordingly in the next 6 to 12 months. This is good news for wool. I think if there's one major factor that will contribute to higher wool prices, it would be relief for consumers in these high consuming countries for wool in terms of interest rates. In America, we're seeing the same thing. A good indicator of what will happen to interest rates are the American bond market. Bond rates are expected to go up. This means that investors would rather put their money into bonds than into money market instruments, and is a good predictor that interest rates will be coming down in the next short term in America. What's happening in our other big market? China. China regulates their economy in a different way from the West. Interest rates in China are quite low at the moment, but also investors are starting to invest in bonds, which gives us a good indication of what is the expected growth of the Chinese economy in the next year or two. This is also looking positive for wool. What's happening with our brands? I think brands are sitting with a huge problem. The pressure for them for sustainability is becoming huge. Up to now, every brand had their own way of managing this problem. We're seeing more and more that this will be regulated. Especially in Europe, we're seeing huge numbers of legislation being passed by the European Parliament and countries individually. We're seeing this trend in the Americas as well, and surprisingly enough, in China. This will have a huge impact on us as producers. Ladies and gentlemen, I think that standards have come to stay. They will not go away. RWS at the moment are the biggest standard in the world, but we'll see more and more of these coming online in the next 5 to 10 years. Doesn't matter to which standard you belong. My advice is get onto a standard. This is the only way that we can prove our very good credentials to the world. Let's look at the middle part of our supply chain, the manufacturing part. One way to measure the health of this sector is to look at the German Manufacturing Index. Most yarns in the world get spun in Germany. The biggest spinning company in the world, Sudwolle, is situated in Germany. This gives us a good indication of how healthy the sector is. Currently, German manufacturers are suffering under high interest rates and high energy costs. They are also very much exposed to how consumers buy our products. At the moment, stock levels are quite low, but not much market movement is taking place. One of the biggest impacts on us directly as producers are shipping rates. Now, there's an important principle to understand here. We as producers pay for everything. Anything that goes wrong in the market, any cost that goes up in the market, gets discounted back into the price. Trade routes, if you look at the cost of shipping from Shanghai to all over the world, has come down significantly. This is good news for us. At least we're seeing the effects of COVID going away more and more in our lives. Now, I always try to find correlations because I would like to predict the future, but the problem with predicting the future is that it's quite unpredictable. So my first piece of wisdom to you is that I cannot find any correlations. What you do find is signs. So you need to understand the market to know what these signs mean. Now, I think a very, very important thing to understand of wool is that we are a small part of the synthetic wool. We produce about 2 million kilograms, 2,000 million kilograms of wool in a year. So it's quite a lot, but still, it's only 1% of the current textile market in the world. So what does this mean? Wool is a discretionary spend. People will buy wool when they have the money to buy it. It's not like synthetic textiles that many people buy because they have to. I think this is a good position for us, but it does expose us to other market trends than the normal world of textiles. One correlation that I've been looking for is a correlation between wool and oil. Why? Because this is our biggest competition. Most textiles, apart from cotton, are being made from one or other wool-derived product. Now, interestingly enough, I do not find a correlation. Sometimes the correlation can even be negative. So, not a good correlation to look out for. What we do find is leading indicators. So, copper and wool has nothing to do with each other on the face of it, but if you put the two graphs together, you'll see there is a correlation. For some reason, they follow each other. It's not a causative correlation, but it is a leading indicator. So, why? I think because copper and wool are exposed to the same kind of market pressures to similar market pressures, if I can put it like that. The prediction for copper going into the future looks good. Copper is predicted to go up about 30% in the next year, and let's hope the wool price follows the copper price. I think if you look at the broad economic terms of the market that we live in, then this is a good graph. This is sorry about the busyness of the graph, but it comes from the European Central Bank, and it gives a probability of a recession in the next 6 to 12 months in the major markets that we sell our wool into. Now, the good news is that the probability of a recession in the next 6 to 12 months, if you include wool prices into that calculation, the probability has come down from 60% to 25% into the medium term. So, barring anything major happening, I think we're moving into a better world for our product in the short term. What are the things that I think will play a major impact on our wool prices for in the next 10 years? Probably climate change is the biggest one. The world is getting warmer. Now, I think there is quite a lot of ways that this will impact on us. I think the first thing is that we will see increased difficulty in production systems. It's going to become more difficult to produce the product that we have. And in some cases, probably easier. Especially if you look at this chart, North America, very, very far North America seems to be getting warmer, much faster than the rest of the world. Which will mean that the production circumstances, production conditions in those areas will probably become easier. But I think the biggest impact on us as an industry will be the pressure on the textile industry to improve our sustainability standards, our sustainability credentials. I think wool is very much well positioned to make use of this. So the big problem is, how do you prove what you say you are? And more, I think the science of it is becoming more understandable. People are getting definitions of what sustainable means. We didn't understand what sustainability means up until very recently, and we're getting to a place now where we can make clear statements of what that means. So, in conclusion, I think if you want to watch out for something, that what will drive wool prices, it will be interest rates. That will be the biggest driver of our market going forward. I do think there are some supply problems, and for various reasons, from climate change to just the economics of farming with sheep. And then watch out for the indicators. I think all indicators, or all lead indicators, would indicate improved conditions for our product going forward. But it is in our hands. How we prove what we say we are, how we do what we do, this is something that only we, as producing countries, have control over. Barring a black swan event, like a war, major war, something like that, I think we're looking at a better future, at least in the next year. Thank you very much. Welcome to ask questions if there are any.